You are watching the Market Watch, the brief overview of the key events from the world of finance. Of course, the conflict in the Middle East continues to be the main focus of attention of traders, investors, and the general public. However, given that this is already the second major military conflict, we can assume a similar market reaction. Note that the reaction on the oil market is fundamentally different, which is explained by the peculiarities of the response of the world community to the military actions in Ukraine. In this case, we are talking about sanctions. There are also certain parallels. For example, in the precious metals market at the end of February 2022, there was an increase in gold prices, similar to the one we noted at the beginning of November this year. It is important to note that in 2022 the gap to the historical maximum was small, which deterred buyers from actively participating in the formation of a significant wave of growth. But at the time of the massive military attack on Israel, gold was trading at a distance of more than 10% from the historical maximum. This allowed buyers to take a leading position and hold them for 3 weeks. Now there is a risk of a change of mood, because the probability of a significant geographical expansion of this military conflict is decreasing, thereby slightly increasing the interest in risk. It may be too early to talk about an increase in demand for risky assets, but it is important to understand that the activity of buyers of protective assets may also decrease. First of all, there is a risk of profit-taking on previously opened purchase trades. Shifting to the foreign exchange market, I would like to draw attention to the fact that the Bank of Japan has left the key interest rate unchanged. This decision put pressure on the yen, which noticeably weakened against the US dollar, losing almost all of the previously received profits. This week, the results of the vote on the key interest rate of the Fed and the Bank of England will also be announced. Investors do not expect a change in the monetary policy of these central banks. But the risk of unexpected decisions or hints of future changes should not be completely excluded. Therefore, there is a risk of further increase in the volatility of trading in the foreign exchange market. And by tradition, we are concluding with a review of the cryptocurrency market, which again attracts the attention of investors. Over the past week, crypto asset funds have raised more than $325 million. This is a huge amount, because over the past 14 weeks, the sum was significantly less than 100 million, and in 8 of the 14 weeks there was an outflow at all. I would also like to draw your attention to the fact that this weekly growth is the 21st largest in the entire history of the crypto market. This indicates the caution of investors, even despite a significant increase in the probability of approval of an application for the creation of a Bitcoin ETF. Consequently, the delay with the appearance of a positive decision may result in a fairly strong wave of sales. This must be taken into account when buying Bitcoin or any other cryptocurrency. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.